So let me just share the screen and get everything ready. Trying to figure out the best way to fix the screens. I want to have it like full screen. I think I can do it like this. Yeah, that should work. Well, let me share the screen so I can get everyone in here. It's gonna be a relaxed stream for you guys in the community. If you're hearing anything in the background, it's like I'm watching Bloomberg on one of the screens. What's up, Henry? So I think today I want to give you guys an overview of what I'm watching in the markets right now. Feeling a little bit under the weather. Is that something you say? I think that's how you say it. Like I'm getting a cold. Definitely. Lots of fighter jets outside today. The military is having some sort of exercise. It's definitely time for a my yearly like last year, probably getting a cold every 3 months or so. It's insane. Definitely time for that now, I feel. Okay, so I'm just gonna open up the change some stuff here on my end. Yeah, exactly. It's 5 degrees Celsius right now. We had the first snowfall today. The sun was just going crazy over that. Okay, so here we have Bitcoin. I'm gonna be opening up a couple of layouts here. Layouts, we click open here. Load. Do I have the VIX? No, okay. Got Bitcoin versus others. Got that one. Opening as well. We're gonna be opening altcoin dominance. And a few. We're gonna look at the crypto market. We're gonna look at Bitcoin. Of course, we're gonna look at altcoins as well. This others. I think total 3. Total 3 is the crypto market, excluding Bitcoin and Ethereum. Look at that. This is the altcoin dominance. That's others. no, others D is the top, excluding top 10, okay? We'll be looking at making a copy. That one. We'll name it total 3. Here we're going to be opening total 3. That one right there. This would be the crypto market cap excluding Bitcoin and Ethereum. Now obviously we had a very solid breakout right here. It looks very good. Where do we have the reload zone? Of course it went down into the reload zone. A very good trend shift here, I would say. Wind is 6 degrees. Wow. Well, I guess it must be summer for you guys when it's winter here, right? This kind of looks like a bull flag, doesn't it? Nice. I love spring. You know, when it's spring up here north, it's so nice. You know, got the because usually when spring comes along, everyone's just so tired of winter. Like everyone's just so tired of winter. You know, just super cold, ice, snow, and you know, winter is fun for like a month. But here, when you have like it's at 3, like 3 in the evening or 3, I guess it's in the evening. It gets pitch black. You know, it's like you wake up. It's black. It's just completely dark, pitch black, and then there's like a few hours of light. So when I wake up, it's dark. I go down into my office, and I walk out of my office, and it's just as dark as it was when I woke up. It's just like complete darkness. A couple of like maybe 4 or 5 months. So I'm just looking up some information on the bull flag because I got interested. You know, when I look at the chart, I see different patterns. I want to make sure that I'm actually studying for CMT. I'm gonna take the CMT. I want to take the test for CMT. That's this summer. I think it's in June or July. So I've started studying on that. So whenever I see a pattern or something, I make sure that I get it right. So this is a bull flag. Now the problem here is this is on the weekly, and I'm not really sure if bull flag can be a high time frame pattern or if it's only a short-term trading pattern. Yeah, man, welcome. I didn't do the schedule for this week. I just thought that, you know, I just woke up, got my coffee, and I felt like, you know what, I'm just gonna jump on a live stream right away. Just go through my plans. So, okay, I'm just googling here, looking at some information on the bull flag, and can't really find any information on specific time frames in the current, but I'm pretty sure that I've read somewhere in the CMT curriculum that there is a difference, and I do believe that a bull flag should be viewed as a short-term trading pattern. But of course, as we see here, and then of course, to really understand, we have to of course, as always, do our own research on that. And if I want the answer to that question, the only thing that I could really be doing is, or should be doing, is just looking it up myself, doing the actual research myself, which I'm not going to do, because it just doesn't really feel like it's important for my type of trading. Okay, so this is the total 3, which is the market cap of crypto market excluding Bitcoin and Ethereum, basically the altcoin market cap. And this is on a weekly, of course, and what we're seeing here is we're seeing a fairly decisive break to the upside. Mark out some levels here. I do think that that's a good level. Can we make this one a little bit smaller, perhaps? And I think I probably that level. That's that level. Now what's the next level above here? The reason why I'm doing this, because now that the bull market is on for real in crypto, and I believe it's going to be, we're going to be in a crypto market, a crypto market, a bull market from now and up till 12 months going forward. So sometime in the end of last year, around the end of last year, I'm thinking that we'll be putting in the top of this Bitcoin cycle. Could be, of course, happening in 3, 4, 5, 6 months. I have no idea, but I'm starting to make plans for not only an exit, but perhaps looking for a few entries on altcoins to ride these last few months of the bull market. And also time the top, but not also time the top, but not time the top in terms of exiting, but also and opening a short position. I would love to be able to have been riding the trend to the upside and also downsides. So I'm trying to make plans for shorts. Like I'm probably spending a little bit too much on levels here. Right, okay, that's the level. Now, what I believe is when we get this breakout, that's when the real fun starts. And I'm even gonna put on a rocket here. That's how fun I think this will be. I think we have a better rocket. That one's the better one. Better one. Where can I find a super awesome cool rocket? Well, I can't. That's the only one trading we has. That looks good, pretty cool. Okay. That's ridiculous. So right now, obviously the market cap of altcoins is reaching, remember by the way, when we hit 1 trillion back in 2021. That's pretty sick. Went about 1 trillion market cap in 2021, end of 2021. Insane. We can clearly see here that on the weekly chart, the top formation was actually a head and shoulders. This is pretty cool. Very good example of a head and shoulders. What's up with that neckline? Remove that one. Well, I never had any problems with this in the past. Is it because it's not even? Right, okay. It's because it's not even. There we go. That's the head and shoulders right there. So obviously the head and shoulders pattern is a good way. Yes, we can clearly see here that the head and shoulders obviously is a reversal pattern, and it's a pretty profitable reversal pattern. Actually, the head and shoulders is one of the most profitable reversal patterns of all the trading patterns out there, which is funny because it's also one of the most used trading pattern, which is then quite funny when you think about it, because most traders are unprofitable. So why are most people unprofitable if they're using one of the most profitable reversal patterns? Well, that's because trading is more than just technical analysis, right? It's more than putting lines on the chart. But this is the total 3. I think we get a good picture of what we're looking at here. I think that obviously looking at this and from my perspective of a price action, level to level trader, I would be looking at this and thinking maybe we'll see perhaps something like this, prior to that move to the upside. Now, I also want to talk about one thing that I'm looking at, a scenario that I'm playing right now. And that is the fact that I believe that we will see a relationship between risk and dollar strength that we are not seeing very often in the market. So I do believe that right now we're obviously seeing this is the dollar currency index. So right now we're seeing strength from the dollar, and of course, and look at, we have the short arrow set up here as well. So right now we're seeing strength from the dollar, which means that dollar is strong. Now, what happens what's one reason why the dollar would be strong? Well, of course, we can look at the American economy. If the American economy is doing well, long term, it should be strengthening the US dollars. Maybe there's expectations of Trump making the American economy great again, if I may. And those expectations are fueling a bullish run on the dollar. Another reason for dollar to be strong is if the American economy is weak and people are expecting the Fed to increase rates, interest rates, so that people holding USD would get more money in return in rates for holding USD. That's not the case though. We don't think that the Fed is going to increase rates. We are now, I believe, in a scenario that played out in 2026. So in 2026, we had, let us take a look at, let's go back to 2026. Last time Trump won the elections. 2026, right here. Why am I saying 2026? I meant 2016, obviously. If Trump, for some reason, wins some type of election in 2026, I gotta go back to this video. Okay, so we got 2016, November. Just around this time, right? Around this time is when the election results were clear. November the 7th, right? And then we look at what happened here. Boom, we see dollar strength. So that is the election, right? We go to right. And then we go to the inauguration of the president, which is in January, the end of January 2017. Okay, so pay attention here. I'm gonna try to inauguration. That's not how you spell it. Wow, that's impressive how inauguration. Okay. That's the election results, and this is inauguration. Now, the idea that I'm playing basically is I'm going to show you what I have here. Let me see if I actually have a loadout for this. Okay, so we'll create a new, we'll save this, and we will create a new layout, which we will call, we will make a copy, and we will call this 2016 Trump election. I'm gonna say 2016 Trump win, risk versus USD. Okay. One more look at. So we go back to 2016. And now what we want to do is we want to put the S&P 500 on here. So we're going to press that plus right there. And we're going to be putting on the SPX. And what we see is obviously a correlation, which obviously does not happen very often. A lot of times when you see a bull market in equities, you see weakness in the US dollar, because a lot of times people are in a bull market, people tend to put on more risk. They feel safer to put on more risk. And in a bear market, people feel more fearful and they want to move to safe haven assets like gold. I mean, maybe gold as well, but the dollar, right? The dollar is a very safe currency. If you put your money in dollar, it's not going to disappear in the bear market. But in the bull market, holding USD is not going to do much. You're most likely going to be losing value if you hold USD in a bull market. except the time in 2016 where you actually had a correlation between risk on and risk off, which began actually prior to elections, where you had a dip in the dollar currency index, meaning there's weakness in the dollar and the weakness in the S&P 500. Right around the election, which we move this here, I believe it should have been around that time, right? So right when you had the elections, right here, that's when you saw that correlation start. And the dollar currency index and the S&P 500 obviously has an inverse correlation. As you can see here, where you have a generally upwards trending market on the S&P 500 and a downwards trending market on the dollar. You have a big move to the upside of the dollar, a big move to the downside on the S&P 500. And here you have a small downtrend on S&P 500, and it well, I guess it's range and then a downtrend or range here. And now you start seeing a big move to the upside on the dollar currency index and a big move to the downside on the S&P 500. But when that move on the downside happened on the S&P 500, the dollar currency index now followed. So what you're seeing here, between elections and inauguration, you had a bullish dollar and a bullish risk on. Now the correlation breaks at or around inauguration, and if we continue here, we can see that now the true deviation happens. Okay, we have a uptrend on risk, uptrend on the dollar. Inauguration comes along, the uptrend kind of continues here, but then the dollar drops while the S&P 500 begins, and a true very strong bull market on the S&P 500 starts. So we have, from the correlation starts, or from the elections, we have around 100 days for the correlation to break. That's the beginning of the analysis. Now that's the overall analysis that lays the foundation for the trades I have open currently. And we can, of course, we go back, right? We have to look at current prices and if the relationship holds true. When did we have the elections? The elections was on, when was the result? I believe the results came out on the 5th, on Tuesday. On Tuesday was when everything was obvious. That's right there. And what do we see? Well, we see a positive correlation. We can go to the 4 hour to make it even clearer. We do see a positive correlation. Now, the correlation between the dollar and the S&P 500 actually started way earlier this time, but I think it's very clear that we're seeing a very similar pattern here. If we move this up, we can definitely see here that we see that move to the downside. Now, remember, this is on a 4 hour. Might not be as reliable, but it's better to look at the lower time frames here because we don't have a lot of price action to really cover. But we can clearly see that there is a correlation here to the downside, and there's also a correlation here to the upside, just like we had in 2016. This doesn't really happen very often between risk assets and gold, but it does ring true now. When do we have the inauguration? Well, that's going to happen probably around the same time, right? It's going to be happening around January the 20th, I believe, around that time. See if I can spell it right this time. Did I spell it correctly? I think I did. So we have, in my opinion, from this time to that time for my ideas to play out, which I believe take somewhere between 60 and 70 days. Now we go to the dollar currency index. Why was all the everything removed here? Remember, I used to remove it from this one, but it shouldn't have been removed on that one. Bit weird. Let's see if do we have the right one. Okay. Whatever. Yeah, Henry, I do think that for the next few months we are going to see the S&P 500 move higher, and with that we're also probably going to see. Oh, that's because. Wait a minute. Sorry about that. I'm on the replay tool. So obviously why the drawings aren't showing. So now we're seeing that dollar currency index is reaching the range highs here, and now let me bring you to the actual ideas here, and I'm also going to create a new layout here for the dollar currency index. XY. Just going to make a copy. The one. And now to my ideas. I'm short on euro dollar based on what I've just described. Now I've also been reading on German government having problems, which obviously I think Germany is the biggest economy in the Eurozone. Obviously a major player in terms of euro dollar strength or weakness, and it doesn't look good for Germany. So I'm thinking that this is the position I have open. I'm thinking that we'll make our way down. Now, of course, I do see a low time frame support right here. I do see we're probably going to get a bounce here based on these lows right here. But long term, I think we're heading to the downside. So with that idea, also we see a short on GBP USD. Enter this one as well, and we can clearly see here on Euro USD there's a very clear change of structure. This is on a daily. I think market structure here is rather clean, and if we do break these lows, we're going to go much lower. So a trade based on some fundamental reasoning, some technical analysis done on the dollar currency index and the indices, of course, and same thing with the GBP USD. I also feel like with the new government in England, they're just killing. This is gonna kill the economy, probably, which is not good for the British pound, probably. And then you add upon that the strength of the dollar and this break of structure. I'm thinking we're gonna go to monthly support, which is where we have this 0.618 right here. We go back out to the monthly, and the chart becomes very clear on the monthly, right? Even on the weekly, we do see that we have a good structure down there. and then of course Bitcoin. Oh, and ADJPY as well, because ADJPY is one of those risk assets, right? It's not risk asset, but it's a risk on currency. When we're on a risk now I probably should have gone long USDJPY, but I think if we look at USDJPY, the technicals weren't really there. Looking at USDJPY, I feel like AUDJPY is still down here, you know. Now of course USDJPY, beautiful trend here as well. USDJPY looks very, very bullish. This low right here is obviously perfect. That's obviously a low that you would want to buy, right? So that's good. I mean, just look at the 4 hour right here. This is just perfect. Look at the last low pre-break. I mean, this is just picture perfect break and retest right here. It's beautiful stuff. Even 1 hour up to that level. Beautiful, beautiful, beautiful. What about gold? Yeah, good question, Henry. What about gold? Well, I'm not trading gold much, and I'm not really a huge fan of gold. But yeah, now we have to think, if gold is a safe haven asset, how would gold perform in a scenario like this? I honestly do not know. I don't know how to read gold. What I do know though is that if we zoom out to the weekly, this is extremely bullish, and it reminds me of Bitcoin. It's just obviously an insanely bullish structure. Now, what we did have for gold is we came up in that short reload zone here and had a rejection, which obviously shows me that we have a potential downtrend starting. If we look at the 4 hour as well, we have sort of a almost like a head and shoulders pattern-ish, you know, thing going on here. You can use your imagination here and you might see the left shoulder, I mean the right shoulder. So I mean, if gold breaks this reload zone here, then we probably have room to the downside. And when I say room to the downside, I'm thinking about this level right here. So perhaps for gold, we'll be looking at something like this. But there's obviously time and space for this to play out. And when we have that, we'll probably also have a massive head and shoulders forming here. So I actually think that a head and shoulders here on gold would be a viable strategy. So that's what I'm watching on gold. That's right, Henry. We can look at historically what happened on gold in 2016. I mean, if we're going to play out, if this is going to play out, maybe the same is going to play out for gold. Yeah, you see so a huge move to the downside basically. And the interesting thing is, if you look at the inauguration, which is, so this is obviously when we had the election results, and then you go to inauguration, which is January the 20th, which is right here. Now, of course, it doesn't play out perfectly, but you can definitely see that almost from elections to inauguration, you had this playing out. So, yeah, if the same thing is going to play out on gold, I'd say we're going to see a move to the downside. But then, obviously, a huge run to the upside. If we look at it on the weekly, yeah, that's like generational wealth bottom buying right there on getting in on that one. So I guess the relationship is true, and it's never going to be perfect in technical analysis, you know, so it's never going to be perfect, but the relationship is true. When was the actual election here? Let's put that on the chart here. We have the, yeah, I mean, that was here, so could be playing out, could definitely be playing out here. And then where do we have the inauguration? It's going to be right here. So that actually plays out very well. The low could be like in the middle somewhere here. So yeah, that would definitely be a trade that I would be looking to trade. Yeah, we got another question here from Ali Hamza saying, how do you manage live trades if the trade moves into a range around entry and stop loss? Yeah, that's a good question. It's a great question, actually. I mean, I'm trading price, you know, so I'm not trading based on any indicators, although as you can see here, I've added a lot of different indicators to my chart here because I'm playing around with it and seeing how it works. Also trying to learn more about these indicators, which I think is very fun. But I'm trading price, right? So right now what I'm trading is this move right here. So what happens if, for example, Euro USD is going to start trading like this? Well, at that point, I mean, it's still a downtrend, right? So as long as the structure remains the same according to my idea, then I will still be in the trade. And now you got to think, what is the trade based on? What's the reason for entering the trade? And for me, this trade is entered based on the analysis that you saw on dollar strength and risk on happening simultaneously. As long as that relationship holds true and we don't create higher highs and higher lows, then I'm still going to be in the trade. So the fact that price is forming a range between entry and stop loss, that's not really going to stop me, because that's not in the plan. It has nothing to do with the overall plan. Either my stop loss is going to get hit, or I'll see, you know, take profit getting hit. Like, it's not part of the overall idea. And of course these ideas are played out basically on, you know, where I found an entry on the 4-hour with that rejection right there, but now it's up to the daily. The entries already happened. Not interested in the entries already happened, so I'm not really interested in the 4-hour anymore. Now it's all about the daily. So as long as the daily structure remains intact, and that also means that price can very easily move up into this region and then starts moving down, no problem with that at all. We can go back, we can look at the Euro USD, what happened on Euro USD on November here. So we have, like, what we're seeing now, what I do think we're seeing now is this move. And then we have another move to the upside. And we might actually see that going back to entry or whatever. So let's put on when the inauguration happened. I was right here. So the low on EU happens before inauguration. The low on gold happens before inauguration. But the relationship between risk on and risk off assets, that correlation breaks actually after inauguration. So I have to keep this in mind. From the election to the low was, or the breakout, that was 60 days. So this trade I'm probably going to stay in it for around 60 days. So if we go back, current prices from the date of the election, which is here, 60 days in the future, that's going to take us here, which I believe is well enough to at least come down and hit that 50% fib, you know. Yeah, like Henry said, I think if a range is forming right below TP, then I would put my stop loss below or above the range, depending on if I'm long or short, and maybe even take profits if it's just right around TP, because that would mean that the trade idea is correct. The trade idea has played out, but your take profit was probably, I mean, it's all a game of probabilities. You're putting in a TP, but you never know if that exact level is going to get hit. Maybe the market decides to consolidate right below, then take that money, right? But when it comes to, if we flip around, you have to view it in the same way when it comes to stop loss. If the idea is playing out, even though you're in a loss, even though you're, you know, in this case, even if we're trading up here, the trade idea is still active, okay? The trade idea is still active. You don't take a loss You don't sell here when the technicals and the trade ideas, everything is playing out and everything is still active. You know, you being a swing trader is all about riding the big moves, looking at the big moves, trying to get as good entries as possible on the big moves. And you know, I could have easily gotten a much better entry here. I mean, I could have put, I mean, imagine if I had my stop loss here. I could have put my stop loss here. This would have been a really big move. And that's successful swing traders. They know when to, like, you know, scale into position. That's something I'm working on now. I don't want to have too tight stop losses, you know, but I'm definitely working on scaling into position, and I'm actually thinking about how can I scale into Euro USD. How can I make more money if the idea plays out, but not risk more than an initial idea? And I think one of the ways of doing this would be to move stop loss, like the trade that I have open now. I can move my stop loss to above these highs. Actually, that's actually what I'm going to be doing, because I'm currently in quite good profits here. So I'm going to probably start securing. Yeah, okay, so let's actually do that live here today. And I'll show you how I'm gonna scale into this. Okay, so we have the position open on Euro USD. Now you won't see it here, you will see trading view. But I currently have my stop loss. Same stop loss. Yeah, so I have my stop loss right there. That's my current stop loss. That's the original stop loss. I'm gonna put a level on here. Standing up. You know what, guys? I'm gonna get. I'm just gonna go get some coffee. I'll. Green higher here, then I'm gonna get some coffee, and I will be right back. So, you know, the reason why I want to start looking to scale into this position or add to my winners, I think it's more about adding to my winners, because I really like swing trading, and I think I'm very good at swing trading. I mean, my expertise is technical analysis on the higher time frames, you know. My background is so black. I gotta do something about that. That's not much better, but that. Okay, so how do we? Yeah, that's right, Ali. The break-in weakness with the negative risk reward is insanely powerful. Now this is actually the first time where I feel like, you know, the analysis that I did on the dollar currency index and S&P 500, that's more has more to do. Your message got retracted so maybe you posted some link or something. But anyway, that type of analysis that I did kind of brings me back to when I started swing trading, and the ideas that I used to take and used to trade with swing trading in the past, where I took very few trades but quite profitable. And then I started getting into more active swing trading, where I remember calling myself a day trading swing trader, where I feel like I did feel a little bit lost. But now when I find these ideas, I can scale into them. Having a negative risk to reward with swing trading means you have to have more trades, right? So it's still something that I'm trading when the opportunity arises, but then being able to capitalize on trades like the one I'm showing you right now on your USD. The thing with swing trading, if you're able to scale into a position successfully, like hopefully I can do with this one, you'll be able to make a lot of money on one trade. That's the thing. One trade can make your whole year if done right. So that's what I'm trying to experiment with now, and understand how how can I scale into positions better. Let me walk you through my thought process here. Now, if I move my stop loss here, that means I can open a new position where if from here to here, if I get stopped out on the first position and the one I'm going to open now, I'll be losing the same amount as if this trade would hit stop loss right here. And then if price continues lower like this, I can open up a new position here with a new stop loss, where that one is in profit, the second trade is in profit, and then the new one, I open that one. So if the new one gets stopped out, I'll still make money on the previous trades. So be adding to the position while still maintaining a good risk on the position. So we're looking at the daily. Where do I think a good stop loss is? I think that level is a fairly good stop loss. I'm going to be using this number to modify position. And I don't have any TP set on Euro USD. And now, go in here. I'll be renaming this short one. And I'll be removing that one. Now we have, actually what I can do is I can copy this one. And I'm going to rename that short 2. Moving short 1. This is short 2. That's going to be the entry, and that is going to be the stop loss right there. Same stop loss. Now what I need to do is I need to look at how much I will be. That's really good results, by the way, the backtesting results. That's really good. Now the problem is you're never gonna have that good result in live trading though. I gotta send a screenshot to Alex. Just give me a second. Why is it like this? Why can't it just be easy? Okay, what were we talking about? Okay, that's right. This is short 2. So if I enter here, that's gonna be my stop loss. What's the T? Yeah. So that's gonna be the stop loss, which means I will have to, on this one, I will have to risk the same amount as I would be losing a full R minus what I'm losing on the current trade. So I gotta do some calculations here. What's full risk? First, I'm obviously using a fractional risk to reward. I mean a fractional risk. Fractional risk management. So I have to go in and I have to see how far away am I from my stop loss being hit on the account. And then I take the dollar amount from the stop out level to current equity and I divide that by 10 and that's my risk per trade. Any percentage that's like probably 0.2, 0.25, something like that. I do that on balance, not the equity. Okay. So I currently have in the market about $500 of risk. Currently I'm risking about $500 to make probably like 20. So I'm very close to my max risk. No, I'm risking, no, not 20, 200. No, 2,000. So I'm risking 500 right now to make about 2,000, 2.5k. So I'm like close to my risk limit, which means on this new position, I can probably only add $100. Obviously not a lot. Yeah, in the funded account. I'm gonna add. I'm just gonna add 100 to this. Let's see. Okay, so I'm in on that one. So now I have 2 trades, right? This is the first one, and the second one. So that's the first one, and that's the second one. So now if price comes up and hits this one, I will I will lose as much as if the original setup would have hit that original stop loss. But if price continues to the downside, I'll be making more money than what I would have in the past with this one, obviously. Now the next trade I have open is GBP USD. Now I do believe that I want to be adding some to this trade as well, and I want to have risk. I want my stop loss to be here, because now I feel like we have confirmation of this move to the downside, so that's going to be the stop loss. That's 3 is good. So we go to the object 3 here, and we see that that's going to be short 1. This is going to be short number 2. Same TP. Actually put in TP for GU. That's a 1-to-1 risk to reward. Now let's move stop loss down. The GU trade. Man, I just love trading like this, you know, with looking at the higher time frames, and we're looking at the so that's the TP. I'm gonna adjust TP here as well. It's 4-3 stop loss. And now we're gonna open up a new position. I have GU. Right, okay. Yeah, so I'm gonna add $100 to this one as well, and you can now see that price is dumping. Good. Slightly below 1 hour on this one. All my positions is in profit, pretty good profit here. Now we have ADJPY. Now I gotta be careful here because I do have a lot of positions open right now, so gotta be careful obviously with that. Gold, obviously I want to see that head and shoulders play out on gold, but I also feel like, you know, not okay. So let me think here. If the scenario that I'm trading on EU and GU is going to play out based on what happened last time Trump got elected, then gold will follow the same trajectory, which is downside, which then means that this rejection here is most likely the start of that down move, which then of course means we could be putting a stop loss above this region. Okay, so is there any money to be made here on a gold trade? Now what I could be doing is I could be putting a stop loss here and then add to this position once in profit and secured. Let me look at the technicals first. Okay, so that's where the stop loss has to be. I have it on like 52. So where is the TP? Well, the TP has to be down here. Well, actually, the risk to reward is not terrible. It's crazy. Yeah, guys, I'm gonna take this trade. Above 1 hour. I did not realize the risk to reward is actually quite good here. Let me show you also one of the reasons for this. For fitting here. It's like the definition of curve fitting. I'm gonna enter this trade on gold. Gold short. So I'm really playing a lot of different positions, the same ideas on a lot of different positions here, which I think this is going to be my last obviously has to be my last position for this this general trade idea. And what I will do going forward is I will be adding to these positions instead of opening more positions. Okay, I'm in that short as well on gold. Let me paint it out here. Yeah, I think that's a solid idea. To calculate my total risk here. I think the only one I'm not liking is ADJPY, but it overall is a good position. Of course, we got the Bitcoin long here, above 80,000 here, just insane. The slingshot indicator signal just hit that last TP. It's pretty cool. You know, I think I'm seeing quite a lot of accelerating trend lines here. If you put on a trend line here, and then you put one on from here to here, you can see that there's a lot of gaining of momentum here. And then it sort of breaks here. So I think that was the first sign of a possible break on the strength of the gold run. This was a good indication of a possible break lower. And then obviously it broke quite heavily there. So I don't have any TPs on the euro positions. I want to make sure that I actually do have TPs in instead of it, in case we come, drop lower. So that's the weekly level. I mean the monthly level, we probably want to put it right there. That's going to be 65. Let's put it at 70, 76. I like that. I don't think we're gonna go that low, but I want to make sure that I do have a TP down there. If for some reason I think I have a TP on and I don't, and then it just drops, because sometimes, well, actually a lot of times I've forgot to put the TP in, and then the move happens, and I think TP gets hit, but I don't actually have a TP in. So the funny thing here is I haven't really done my weekend trade planning, which I think I should have done, but there's just, I have so many positions open right now, and there's just a lot of switch. Yeah, there's just so many ideas activated here. I think I want to make sure I focus on what I have. I mean, I'm already 150 pips in profit on EU. Telling you guys, these positions are looking absolutely amazing. By the way, guys, people are starting to get very bullish on everything, right? Especially Bitcoin and crypto and everything. So just make sure that understand that when people are most bullish, that's when the bull market ends. Okay, so pay attention to celebrities, famous people, so-called experts. Pay attention to maybe not what they're saying, but how they're feeling. Okay, I want you to pay attention to the sentiment, and I want you to be stoic in that regard. Because if you get sucked into the hype, then you'll just fall victim of being. Let me show you what how the market works. Okay, you have accumulation. This is where smart money enters the market. You can, of course, say that this is smart money accumulation. This is the public participation phase. AKA the bull market. Then here you have the distribution range. Smart money sells to the public, and this is how a cycle like the one we're in right now works. Okay, smart money enters. This is where big money, the big players, the knowledgeable investors and the institutions, and this is where we bought. This is, if you follow this live stream, if you follow me on Twitter and here, yeah, this is also the Dow theory, but this is where we entered Bitcoin. Okay, this is where we entered the bull market. We are now in the public participation phase, and I want you to pay attention to what these distribution ranges have looked like in the past. Now, the big money, the institutional money flow, they need liquidity to exit their positions. They need a lot of liquidity. Okay, so they need people screaming, buy Bitcoin, it's going to be a bull market, we're going to go to 100 million thousand trillions dollars. They need people like that, because they need the public to get sucked into the hype to buy their positions. Wherever there's buyers, there's sellers. And we need, okay, we need the public to buy our bags up here. Otherwise, there's no liquidity. But when that happens, it will be at peak euphoria. Now remember, smart money, or the knowledgeable investors, they buy at fear and they sell at euphoria. Now that's just how the markets work. Do not get sucked into the euphoria. When there's peak euphoria, you know, top signal. So what could a top signal be? Well, it could be like in 2017 when we had Katy Perry painting her nails in different altcoins. Could be that your taxi driver is driving a Tesla and on the screen there's TradingView. Or maybe there's Bybit or Prime XBT and there's a 100 times leverage long open on Bitcoin with its tight stop loss where it's like, all right, you hit that stop loss, you're going to lose 30K. Taxi drivers, things like that. That's in euphoria. your girlfriend comes home, or your wife comes home from the hairdresser, and she's talking about how everyone seems to be making money from Bitcoin. Why are you not making money from Bitcoin? Why are we not rich yet? Things like that. Pay attention. It's so much more powerful than price action. Okay, so much more powerful than price action, because if you sell at peak euphoria, you're never going to be far off from the actual top. You know. Now, of course, now we have different times. We have Trump administration wants to like do something real with Bitcoin this time. They want to like maybe create a national reserve, and that will create euphoria, and that euphoria will probably hold on for quite a long time. But what I'm saying is, the top in a bull market will never happen at fear. Never happen at fear. Always euphoria. So it's important to keep that in mind. Okay. Now on that note, it's time for me to end the live stream. Take a quick break. It's been one hour now. Overview of watching here. Yeah, but I think with housing, I think we're probably not going to get a. I mean, I thought the housing bubble would perhaps collapse with the rise in interest rates, but I do feel like where I live, there's actually a couple of good houses that are not selling. They're not selling at all. So I feel like the housing market is probably going to be surviving this bull market for real. For sure. I think there's not going to be. I think we're not in a housing bubble, but this bull market might fuel a housing bubble. You'll have a lot of people making a lot of money. You'll have a lot of people being able to put on risk. You'll have lowering interest rates. Money's going to get cheap again, and maybe money will be too cheap for too long for people to put on too much debt, and then bear market comes along, maybe inflation is increasing, we have to increase interest rates, and people are, you know, standing there with maybe, you know, multiple houses and a very low interest rates, and then all of a sudden interest rates go up. And I think we got lucky this time around. I really do think we got lucky, because inflation started going down at the right time. If we would have inflation going up for another 6 or 12 months, that would be bad, I believe. All right. Anyway, thanks for joining here today, and I'll see you guys perhaps later today on the Fiverr live streams. And wow, gold is moving lower. Nice. Okay. Let me know if you have any questions. Take care, and I'll see you guys in the community. Take care.